Hey gang, welcome back to another episode of the Trading Coach Podcast. As always, my name is Akil Stokes, professional Forex trader and trading coach over at tier1trading.com. In today's episode, I'm going to share a few, a somewhat embarrassing story about my past career in money management. It's a hard one. It's a hard one for me to share, but I think it's important because there are some valuable lessons that I know I learned throughout it, and there will be some valuable lessons that you learn as well. So listen up closely. Now, I appreciate you guys supporting me. Please keep supporting the show, whether you're watching this or listening to this on Spotify, YouTube, Apple, Stitcher, wherever. Make sure you like, make sure you share, and make sure you guys keep spreading the word about the Trading Coach Podcast. Here's a way to think about it. You can only control what you can control anyway. So you can't worry about your competition. Because let me ask you this, right? If you're managing money and you see that the mutual fund, right, that your client was with before has suddenly increased their return on investment, and it's now become a threat because you think that your client may go back to putting their money in there instead of with you. How does that affect your trading? I do not manage money for others. No, I used to. I hated it. Yeah, it doesn't affect your trading at all because guess what? I mean, what can you do about it? Are you going to force yourself to somehow create a larger return? Are you going to do that by taking more risk? Are you going to do that by trading more aggressively? Are you going to do that by adding pairs of your portfolio? How are you going to create that larger return, right? Your system is your system. Your system produces what it produces. How are we going to magically just get better? We can increase our position size. Yeah, what happens when you increase our position size? Yeah. Increasing position size is how I lost $30,000 for a client in almost about 2 weeks. Most of it in 2 weeks. Many of you guys heard that story. I'm gonna tell you it again, right? When I was managing money, I had this client, and client gave me about $250,000. Wanted to get $100,000 out of him. Gave me $250,000. Super excited. Super scared actually, but super excited. Because at that time, I'm like, commission, yeah, right? I need to make a living, right? And my goal was the same as it is now, make about 3% a month on average, because that's what my system produces. That's what I've produced, right? So my goals aren't, I don't, when I come up with goals for my return on investment, it's not based on what I want to achieve. It's based on what I can realistically achieve. And that was averaging about 3% a month. And I was averaging 3% a month. I had a good run going. And we're talking back and forth with the client, showing them the P&L statements and like blah, blah, blah. Hey man, we're doing good. Slow and steady wins the race. Very low risk, right? Because the main goal is to not go broke. Even more so as a money manager, your main goal is to avoid drawdown, right? Trading my personal account, my max drawdown is about 30%. So I can go through a 20% drawdown and be like, okay, well that stinks, but I'm gonna keep trading it. Managing money, you really don't want to get in the double digits. You don't want to go past 10. So I'm trading well, talking to my client, and my client says, yeah, man, that's good, but I see you've been on a little bit of a hot streak. Shouldn't you be making more? And of course, I'm spineless back then. Right? The client is always right because they're providing me my living, right? Because if I don't have that, with all the thousands and thousands of no's that I heard, this was one of the first major clients that said yes. And what I'm making off of their trading or off of trading their money is providing me a living. So I'm like, we could increase position size, but that would give us risk on the back end and blah, blah, blah. It's like, yeah, but I'm willing to take that risk. Yeah, but we're coming off a hot streak. I'm typically about a, like 55 or 60% trader, but hitting about 70%. So, there's going to be a drawdown coming, and we just want to make sure we have enough set aside to take on that drawdown. Yeah. I understand. I'm willing to take that risk. So eventually I cave in. And we basically, I think we like double or if not quadruple the position size, something ridiculous. And what do you think happens as soon as we double or quadruple the position size to try and get this bigger return? What do you think comes? Yeah, you know what comes. Big old drawdown. Now, some of it was my fault. I was trading a highly correlated portfolio. I had about 6 yen pairs in my portfolio. And a lot of minor pairs. And a lot of those yen pairs, they moved the same. Way. So I got the same signal on about six yen pairs at the same way. At the time, I was trading like a momentum strategy. Now, at the same time, right, when those 6 yen pairs were moving in the right direction, made a boatload of money. But that's why I was saying, hey, eventually there's going to be some type of drawdown. So we had a period of time where I think I got like 6 signals at the same time, 6 or 8 signals at the same time. And it was just when we started trading this inflated position size, again, about either 2 or 4 times whatever I was supposed to be trading. And of course, boom, all losers. Pips hit the fan, as Daniel says. All losers. So imagine taking about 6 max trades at the same time, 6 or 8 max trades at the same time, and just have all of them just beat you in the face with doubling your position size right before. Massive drawdown. Massive. That's what happens when you try to do something different. When you try to get cute. You are what you are. Your strategy is what your strategy is. Your system is your system. You're not going to automatically make it better by flipping a switch. If that were the case, how come you didn't flip the switch at the beginning, right? If there was this one thing that we can fix that was going to make our trading better and increase our ROI, how come we didn't do it from the beginning? You ever think about that, guys? CPI, oh, missed the CPI news, doesn't matter. But think about it like that, right? If there is one magic thing we can change that, okay, we need to create a bigger return on investment because of X, Y, and Z. Okay, I'm going to flip this switch and now I'm going to do it. Why wouldn't we have that switch flipped from the beginning? All right? And the secret is there's not. There's no magic switch. You try to trade how you trade as efficiently as effectively as possible, and you take the slow and steady approach. What was your reaction right after the drawdown happened? Well, I wanted to throw my computer out the window. I always say at the time, if I could have afforded a new trading computer, it would have been out the window. And the drawdown wasn't the worst part. Here was the worst part. So I quit trading after that drawdown for about a week. I was so sick. I was literally sick to my stomach. I didn't want to look at a chart. I didn't want to look at a computer. I was beyond depressed. Again, this is my life, guys. And the way I charged, I only made money off of new equity highs, right? So what that means is that I only took commission. I only took a check when I made my client money. Like not money per month, but new equity high. So if the account started at $250,000, right? I only made money on whatever was above $250,000. That make sense? So if I went into a drawdown, right? If I lost say $10,000, went down to $240, and then went back up the next month to $245, I can't take a check because I'm not above those new equity highs. That was the deal that I had to make in order to attract the client, because I'm this nobody, and why would I give a nobody a chance to manage money? So I had to make a really, really sweet deal. Would I do that now? Probably not, because I have a little bit more clout. But you got to do what you got to do. So I was depressed. I stopped trading for a week. shut off the computers, just went to a very, very, very dark place. And then, like any quality athlete, I gave myself a pep talk and I got back after it. And what was worse, here's the worst thing. This is the worst part of the story. After about a week, I switched on the charts, right? And of course, the market gives us some correction. And I don't know what the move was. It was some type of fundamental news that came out that caused a reaction. That's why everything was moving so correlated. But I came back, opened up my charts, and I saw that if I wouldn't have quit during that week, if I would have just kept trading and took the signals that I was supposed to take, I would have made double what I lost back that week after. That's the part that sucks. It's not losing the money sucked, don't get me wrong, but it was the fact that if I would have just stuck to the plan, right, I would have made it all back plus some. And I didn't stick to the plan. I quit, basically. Now, I reflect on that. I look at that as being a negative. But you can also say this. What do we tell you guys? We're not supposed to trade if we're in a negative state of mind. So at the same time, who knows? If I would, I always would say, oh, if I would have just kept trading, I would have made double my money back. Who knows? I could have lost even more. I could have been so upset and mentally out of it that I could have went into revenge mode and or could have been scared. So who knows what would have happened? So I don't want to necessarily say that I would have gained double back. But if everything worked out perfectly, I would have. So, yeah, thank you for bringing that back up. The most embarrassing moment of my trading career. Whoever asked that question. How did the client react? I wasn't very happy about it. I wasn't very happy with him either. Because again, it was his fault. If remember, we were trading about double or 4 times the normal position size. So if we were just trading what we were supposed to be trading, it would have been a very small dent. One that was expected. But when you double your position size, right before a drawdown, it takes away from a lot of the gains. So let's just say I thought a lot of things that I didn't say to this client. And I never shift blame on anyone else. It's my fault. But it's like, dude, I told you. I told you this was going to happen. Doesn't make it any better, but I told you this was going to happen. Like I laid it out for you when we were having our initial discussions. But life lessons, guys. It is what it is. You live and you learn. If I never went through that, who knows? I probably wouldn't be teaching right now. If I didn't go through that frustration and learn what I didn't want to do with my trading business, probably wouldn't be teaching right now. Well, there you have it. Embarrassing, yes, but you know what? I believe that everything happens for a reason. And although that was a painful experience, it allowed me to realize what I didn't want to do and helped put me on the path of doing something I love, which is helping and coaching traders. I'm someone that has been through a lot of painful experiences in my trading journey, and I look at that as a positive because I can now share with you those stories and hopefully help you avoid those same obstacles. Real quick before I let you guys go, do me a favor, please take a second out of your day to hit that like button and share this episode on social media. I know it doesn't really seem like much, but I promise you each time you share it, we are reaching more and more traders, and that does allow us to achieve our goal of really impacting newer traders by sharing with them the reality of trading and, well, hopefully helping them avoid some of the pitfalls that many new traders fall into. So if you can do that, I would be very, 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 very happy, and I'll see you guys next episode.